Hey everybody, this is Halstead and Andrew McMillan with REH CPAs. Today we want to talk about accountable plans. A lot of you all out there are small business owners and you have employees that are either traveling or you know, they may incur some expenses on your behalf, whether it's buying office supplies or things like that. And sometimes they do that out of pocket and then you want to reimburse them for that expense. Well, in order for you to take the deduction and for it not to be included as taxable compensation to them, you have to create what's called an accountable plan. I've got Andrew McMillan here with me today. He's going to talk about accountable plans, what you need to do, how they work. Andrew, what can you tell us?
Yeah, so like you already alluded to, the benefits of an accountable plan is being able to reimburse your employee without it being taxable compensation to them, because that's not what you want. You don't want to have to include it in their W-2 because then it's taxable income to them, and you also have to incur payroll taxes on it. So the workaround for that is the IRS allows you to set up an accountable plan, and it sounds complicated, but it really isn't. It's actually pretty straightforward. All you need to do is just have a company policy in place where you reimburse employees for their out-of-pocket business expenses. We do recommend that the policy is in writing. You know, it can be as simple as just a one-page write-up of that your company has an accountable plan and that it meets these 3 criteria that the IRS has specified that it must meet to be a valid accountable plan. There are some templates online that you can probably find as well to help you pull that together if you needed it. But more importantly, those 3 criteria is for it to be considered an accountable plan, the expense reimbursement must have a business connection. You must have adequate substantiation for that reimbursement, and the policy must have a stipulation that if you have any excess, if you pay an employee in excess of what the expense was, that the employee must return it to the employer.
Like, for example, if somebody says, hey, I'm taking a client out to dinner, can you advance me some funds for that? And they give like 100 and then
Yeah. So the business connection piece, so it must be for the business. You know, it must be taking a client out to dinner, going to Office Depot, buying office supplies, travel. A lot of times you see people getting reimbursed for their mileage. It must be connected to their business. And then the adequate substantiation, it must have, typically that means just you get a receipt for the expense. If they're traveling, they submit you a mileage log, like I drove, 15 miles here and there to go meet so-and-so client to discuss X. Just some sort of substantiation to back up that expense that you're giving.
Definitely make sure you get the receipts and the mileage log and keep those for IRS purposes in case if there's an audit.
And then, like I said, and if you give them more money than what they actually spent, then they must return that excess. So that's really all there is to it. It's actually really straightforward. There's not a lot of formality to it other than just having something written within your corporate documents that say we do have an accountable plan that meets these 3 criteria, and you should be good to go.
Awesome. So if you guys out there have a small business and you want to learn more about accountable plans, feel free to give us a call and we'll help you out. Thanks.